Of all the large global initial public offerings of all time, none has crossed the $30 billion mark in proceeds raised yet. Alibaba's 33% owned affiliate Ant Group could soon do that, and aims to raise $35 billion by listing simultaneously in Hong Kong and Shanghai, and that will top the $29 billion raised by the oil giant Saudi Aramco last December.
It is a high growth stock. And don't forget that its parent company or one of the major shareholders is Alibaba. It just provides one more choices of new economy stocks.
The share offering will be split evenly between Hong Kong and Shanghai. Ant intends to sell up to 1.67 billion shares in each market, and that will represent 11% of its enlarged share capital. There's also a green shoe option, which will allow underwriters to issue as many as 15% more shares than originally planned. The fintech group has come a long way since it started as a payments app, Alipay, in 2004. It has evolved into a financial powerhouse with businesses in wealth management, investments, lending, and insurance services on top of payments.
They emphasize that the Ant Group is going to use the internet technology, internet tech firms' mindsets to get into the traditional financial industry. And if we take a look at their core business, they try to build and reshape the business infrastructures in China, such as the digital payments. They also build a credit system. So they create an ecosystem with huge data and improved algorithm, and with which they can do better analysis of better products and deliver better services.
This strategy has enabled Ant to tap into a market that is underserved by the traditional banks.
They can use the data to provide small loans to the small business owners. And right now, I think it has around like 20 million of the small business owners. Traditional bank and the SOEs, it's very difficult for them to offer small loans to these like 20 million of the business owners.
But all is not rosy, as there are some risks to Ant's future growth. China's financial watchdog is increasing scrutiny on non-bank financial companies, including Ant, amid concerns about the growing role of these firms in the country's financial sector. They will now be designated as financial holding companies as long as they have businesses in at least 2 financial sectors, and will have to apply for a license to continue operations.
The aim of the regulators is to level the playing field between the internet firms like Tencent and Alibaba, and with those traditional financial institutions like banks and security brokers. So we think the financial regulations are not targeted to hinder the growth of these internet platforms.
Another risk, the potential threat of U.S. sanctions. The U.S. is exploring sanctions on Ant's digital payments platform over concerns it threatens U.S. national security. Ant itself has also warned in its prospectus that its business may be adversely affected if the U.S. issues further restrictions on Chinese tech firms. But market watchers are not so concerned, as they say Ant's main market is still in mainland China.
The Ant Group's profits are all generated from the domestic markets, and the overseas revenue only represented less than 5% of total. And the second, the global answer global TPV, the total payment volume, is merely 0.6% of its China TPV. So based on these numbers, we think the impact is very small.
Even though Ant generates a large portion of its revenues in mainland China, its market share remains low there, giving it scope to expand further.
Ant Group has already accounted for 10% to 20-ish% of total online financial service. But if combine the both online and offline service. And actually, its market share is very low at single digit. And we think Ant is best positioned to benefit from such trend that the market is migrating online, and also Ant is able to achieve expanded its reach to the long-term customers.
But could stiff competition in the mainland Chinese market present some headwinds for growth?
Ant has a very massive scale, and it has over 700 million monthly active users and 80 million merchants, and also over 1,000 daily live applications on its platform. So we think this has translated to a very sticky platform and also a very good user experience.
In mainland China, analysts say Ant's closest competitor is Tencent.
We don't see any other online and offline competitors which can reach the scale or financial resource to the extent that can enable the company to get into head-to-head competition with Ant, except Tencent. But we think Tencent has a different business development strategy in their digital finance business.
Longer term, further growth for Ant will come from overseas expansion, particularly into emerging markets in Asia.
You can see that they're already making a lot of investment in Asian countries, including Korea, including Indonesia.
If you think about the business model of the Ant Financial, one of the great things is actually the business model facilitate the data. They can tap to the mass market, lower income people, individual consumers, small business owners, and then that potential in the region of Southeast Asia or emerging market, actually it has a mass market